Hey traders, Nick Shaheen here looking at oil. This is like the easiest thing to trade on the planet, and if you listen to the experts in the media, they make it sound so complicated. Develop a thesis. I'll share mine. Anywhere above 60 it's a short, anywhere closer to 52 it's a buy. It could fall to 48 or so, but people who tell you OPEC doesn't matter are wrong. At least I've been working with the assumption of what OPEC wants to do, and I haven't been wrong yet on oil, and I can prove it. You can go back in history and look at all the videos I've done on it. The most recent video I did on that spike, if you remember, something happened in Saudi Arabia, drone strike, oil spiked. I said I would short it, and then I said the step one of the bulls is to get above I think 59 was the zone. I said that was an important line. 58 and change, probably because of this one. Split the difference between these two. And I said, okay, job number one is to get above it, and job number two is to hold it so you can use it as support. As soon as it gets here, people start talking $75, $80 oil. I even saw somebody over 100. That is ridiculous, absolutely ridiculous. And given what we have now, it's not going to happen. So the job number two of keeping that $59 line didn't happen. Maybe I'll post a link to the video I did before, and you can see it. It's in minute maybe 6, and I'll put it in the write-up. I say exactly what I just said. Job number one is to get above it. Job number two is to hold it so you can use it as building blocks. But didn't happen. It turned out to be there was a one-day event, whoop, and then got back to below it, 2 days, and then fell apart from there. All right, so I just, after this drop, around here, in fact here, I shared with friends in the chat room saying, don't short oil. It's not going to fall much below this. So if I wanted to go long oil, this would be the entry point. And then when it got to here, I think late October 24th, I said, this is where it's going to stop, level 1, meaning it's going to hit resistance. It could go higher, but it's not going to be a slice through. I said, this is the 50% Fibonacci retracement of this whole thing here. This was a massive correction. So it fell, whatever, almost 20%. The 50% retracement level is exactly that. So I started saying it's going to head into the 50% retracement. In fact, these are the two, October 4th. Okay, don't short it. And then 50% retrace. It's a prior ledge. So what happens? It recovers. Whoever was stuck here wants out. Also, whoever loves Fibonacci, they'll say, hey, 50%, this is a good place. But even more, this is a place where it has been a battleground before. What is that number? 57 and change. It's a battleground. Look at this right here. Furthermore, this pointy thing right here. Okay, so lesson time. So the point of this video is to tell you to ditch listening to the news. For me, the day I stopped listening to the experts on oil is the day I'm never wrong on oil. Okay, and if I wanted to trade it, I'll use the USO, and I sell puts or put spreads on where I think it has support, and then if I wanted to short it, I'll do the opposite on the other end. My last batch expired worthless, so I sold them. Somebody bought them, they lost their money, I won. So worthless in my favor. Okay, so here's the proof in the pudding. This is the value area. What does that mean? So these are volume bars down here. Everybody knows what they are and how to read them. Heavy volume day, green, blah, blah, blah. So what is this? This is the same information redistributed based on at what level the stuff happened. So all the stuff, at what level did they happen? This is the level I'm talking about. So this highlighted area is where most of it happened. This is called the value area. People can move around these parameters. I just left the default, and it's called the volume profile. And so this tells me that anytime you approach here, it's for, as my friend Carlos would say, for loading and unloading only. Meaning if I'm long, this is where I should lighten up. If I'm looking to get long, this is not where I start getting long. I see if they can go above it and then come back to it to do this. Conversely, if they approach this, if I'm short, this is where I start offloading my shorts. If I want to short, this is not where I start shorting. I want to see them do this and then I short. So having said that, if you don't believe that this is the right thing to do, you've heard of head and shoulders, okay? So this is not a perfect head and shoulders, but look how the two logics work together. You come to a neckline and then you breach the neckline and you fall apart after tracing out a bearish pattern. Same concept, not same thing, same concept. So in this case, the value area tells me that if I'm down here, I shouldn't start shorting. Indeed, 1024, I mean 10, whatever the date was, 4. I said don't short it here, chances are it's going to bounce. Up here, don't chase it here, chances are it's going to stall. I'm not saying it's going down to 0. So, okay, so if it stalls, it's still okay. The bulls are still in charge. The buyers are still in charge. If they go back up to here, now they face an opportunity to do this and do this. You've heard of cup and handle. This would be the cup and handle that they have an opportunity to retrace. So then they can prove to us if they really deserve this candle or not. Look where I stopped instinctively. I didn't do it on purpose, but if I had looked left and I've gone higher, I would have said, no, wait, I got to change that line. I don't care what this says. This says it's going to go higher because the cup is deeper. To me, this level is pivotal and they're going to fight it out. And look at this. This is like exactly this level right here. So this is a ledge and a roof and a roof and a roof. And if they ever get back to here, it's going to be a roof again. So it's going to be R again. So this point right here, this orange line, is where they fought it out the hardest. That's another reason why this zone was resistive. What does that mean, fight it out? This is, according to this volume profile, these bars, the bulk of them happened right here, around 56.20 something. That's where most of the most occurrence of these bars, volume bars, is around here. So this is where bulls and bears, buyers and sellers, better than bulls and bears, because you can be a bull and sell to book profits. So buyers and sellers fought it the hardest. So the strategy for oil, it's very easy. If it approaches 60, I don't start. And in this case, we have more defined level than just 60, but 60 is a good round number. 52-ish is a good starting point. If I want to be conservative, I'll go down to 51. All depends on my strategy with tight stops. So ignore how much we're using, how many barrels they found. Trust me, it is a rigged game, literally. This is literally, it's controlled by OPEC, which is an illegal thing in the US. You cannot form an OPEC in the US. You can't have a whole bunch of people sit in a room and control the price of the most usable commodity on the planet and let it happen. So they get together and they say, this is the price we want, this is the production we want, this is how much we're going to cheat, this is how much we're not going to cheat, or say we're going to cheat and we're not going to cheat. Trust me. Up here, they lose market share. Down here, they lose money out of their pockets. Up here, the West starts cranking out all the Canadian and all the more expensive oil to pump out. They can probably pump out at $7 in oil in Saudi Arabia and break even, but they have to fund their social programs, which is probably they need $50 to $70. I'm not an expert there, but I know it's a higher number. So there's a sweet zone where not too high where they lose market share, not too low where they lose money. So somewhere in the middle is where they want it. When it gets down to here, you start hearing of kidnapping, of barges and attacks and all of that. When they get up to here, oh, everybody's abiding by the cuts and we're going to keep the cuts longer, and they talk it down. Down here they talk it up here they talk it down. Make a note of